everyone, welcome to my video. For those of you who do not know me, my name is Lanka Joseph and I'm an enrolled agent admitted to practice before the IRS. So today what we're gonna talk about is audit. So this is really gonna be a two-part videos. The first one is gonna go over what an audit is and what happens when you get a letter and the different type of audits. And the second one is gonna be about the 5 ways to avoid getting an audit. When the IRS is auditing your business, what they're doing is that they're doing a review of all your accounts, which means that they're looking at all your financial statements to make sure that everything matches with your bookkeeping. What that means is that they really want to make sure that you're not underreporting your income, which means that you are overreporting your deductible expenses. And then again, which means that you are reporting less tax liability than you really have. What happens when you get audited? There are 3 things that can happen. The first thing is that the IRS finds out that you don't owe them any money anyway. So they're like, okay, my bad, you do not owe me any more money. Everything you reported was accurate, so they leave you alone. The second thing is they find out that you owe them extra additional taxes, and you go ahead and agree with whatever they tell you that you owe them, and you sign a legal document and you go ahead and you pay whatever amount that they tell you that you owe. And the third thing is, you do owe them additional taxes, but you want to go ahead and dispute it. In this case, you will want the support and expertise of a tax practitioner, like a tax lawyer, and a CPA that represent taxpayers in front of the IRS, or an enrolled agent like myself, who are admitted to represent taxpayers in front of the IRS. So depending on your argument, the IRS will either reduce the amount that you owe them, or you lose the argument and you make the full payment, or they throw out the charges altogether. So what triggers an audit? It's almost impossible to really anticipate an audit, but they can be triggered by one of the 3 reasons. The first one is a random audit. You get randomly selected by the IRS system. The IRS system kind of goes mini, mini, mo, and tada, you win. You won, and you get paid to get audited. The second way is computer screening. Your returns falls outside of the IRS norms, which means it get flagged. It gets red flagged. So the different ways you can get red flagged is if you go if whatever amount that, for example, whatever amount that you're trying to deduct goes way over the norm of your the income reported for your industry. For example, let's say a real estate investor, right, who's reporting $100,000 in income. Go ahead and report, let's say, $30,000 for advertising. When, just an example, when really for the average norm for for real estate investors reporting $100,000 in income, or reporting $5,000 for advertising. So that is completely out of the norm, and that gets red flagged. And of course, if you actually did spend $30,000 in advertising and you can prove it, that you won't have any problem. But just to know that is a red flag if you report anything out of the norm. So the third reason is a related examination. So what that means is that your tax return is connected to another taxpayer who is getting audited. So you may get audited just by association. So and then again, for another example that would be if, let's say, in the case of a real estate investor who works with a contractor. That is the general contractor that they always work with, right? And for some reason that contractor is getting audited. Well, just because you're associated with that contractor, you might get audited as well. That doesn't always happen, but it can happen. So that is why a lot of individuals say that, well, the IRS will never audit me. I don't make a lot of money anyway, but you never know. Especially for business owners, you work with different people and you don't know what they're reporting, and you don't, just because they might do something and they get audited, you might end up getting audited. So that's why it's really important to make sure that you stay compliant and you do what you're supposed to do. So even if the IRS come knocking at your door, you're like, hey, you can look at whatever you want because I'm fine anyway. So what are the different ways you can get audited? So an audit fit 3 formats. It's either a correspondence audit, an office audit, or line by line audit. So the correspondence audit, which is very common, the IRS will send you either an email or a mail. It's mostly a mail. The IRS doesn't really deal with email, so kind of get on the lookout for that. If you get an email, it's sometimes a fraud. The IRS try do its best to really communicate with taxpayers through mail. So it's either a mail, the IRS will send you a letter in the mail and tell you this and this and that, that you omitted income, or you owe extra tax, or whatever it is, and then and you resolve it, and that's it. The second one is an office audit. The office audit is that an IRS agent will want to interview you in person, which is highly recommended that if you're getting an office audit, that you do consult a tax practitioner. And again, it's either a tax lawyer, a CPA who actually represent taxpayers in front of the IRS, or an enrolled agent who are admitted to represent taxpayers in front of the IRS. So with the office audit, you and your tax practitioner will either meet the IRS agent in your office, or an IRS office, or any locations that both you and the IRS agent decide to meet. And then the third one is a line by line credit. Like I mentioned, I don't know if I mentioned that before, the IRS do pick people randomly from different industries just to make sure to know, hey, what are the norms, what are being reported, and they check every line in your tax return, and to find out what are the norms and what are the abnormal things that people will report for your industry and for your income level. So like I said before, if you do get a letter from the IRS saying you're getting audited, the first thing to do is, it's really recommended that you do contact a tax practitioner to make sure, hey, what should I do? Should I dispute this? Or they would really help you decide what's the best course of action. Because, and then again, you have to remember that the IRS office, even though sometimes you do find one, or an agent that are willing to help you, but, and then again, their job is to collect the tax that's owed. The job is not really to serve the taxpayer per se, but the job is to collect the tax that owed because they have a quota to meet. So, but regardless, if you are getting audited, as long as you comply and you provide sufficient record, and you're compliant, and you have everything recorded and reported, and if they do find out that you do owe extra money, then you pay the fine and you demonstrate that you did not have any criminal intent, and you'll be fine. So if you did get a letter from the IRS for whatever reason, or you have any questions and you would like to have a consultation with me, please book a consultation call with me on my booking calendar, and I'll be more than happy to assist. I hope this video helped. I'll talk to you guys later. Bye.